Gosh, we need a bit of a drum roll, don't we? Thank you very much, everyone, for giving up your lunch hour today and coming to hear our talk. So I'm Jo Fawkes, and I'm the chair of the Professional Women's Network here at Said Business School, University of Oxford. And I'm really thrilled that we have what I think is going to be, an amazing event today. So I want to introduce you to a couple of women that I've been working with and had the pleasure to get to know. The first one is Dr. Ethel Mupambwa, who has flown over from Zimbabwe. And Ethel is the CEO and founder of CEOMoneyMart, which is a microfinance institution. I think you've got about 30 branches, haven't you, across Zimbabwe? And you specifically support female micro-entrepreneurs. So I thought this was really appropriate for International Women's Day. And then also Tokunboh, Ishmael, who has flown over from Nigeria to be here at the school today. Tokunboh runs an investment fund, and she does a lot of work with women entrepreneurs in Nigeria and across Africa as well. So I'm sure we're going to hear lots of interesting insights from Tokunboh. And then finally, for those of you, everybody knows Thomas, who is our Professor of Entrepreneurship and Innovation here at the school. And he is going to moderate today's session. And the reason why Thomas is here is because he is helping us out on a new project that the school has got involved in, which is on global inclusion. And this is providing financial and business literacy programs to micro-entrepreneurs in Africa and India. So Thomas is our academic lead on it, and he has been helping us out with some of the research that we've been doing and will be involved in the program going forward. And I'm saying this deliberately on camera so that he can't, run away afterwards. So over to you, Thomas. Thank you.
Well, it's a real pleasure. Welcome everybody. Tokunboh, I'm terrible with names, and Ethel are the real show. So we're going to go, I think, straight into it. They've both had incredible careers. And when I mean incredible, it's because they did incredible things, and they did things in sometimes incredibly difficult circumstances. And I think there's a lot we can learn. So I think we should just start. And if it's okay with you, Ethel, I'll start with you, and then we'll sort of move this way, if that's okay. But tell us a little bit. It's not a complete coincidence that you are working on financial inclusion, for neither of you, obviously. It's not a coincidence. And tell us the story how you've gotten here.
Oh, thank you so much, Thomas, and hello, everyone. It's a pleasure to be here and to fly all the way from Zimbabwe to come and share experiences. I'm Ethel Mupambwa, founder and group CEO of CEOMoneyMart Finance, one of the fastest growing digital microfinance institutions in Zimbabwe. And our focus is more on women and youths. For me, I grew up a very rural girl, and in a patriotic society where the girl child was more of getting into marriage and bring some sort of income home after the dowry has been paid. So I could see the devastating lifestyle that I lived in. My father was a polygamist, and I have so many mothers. They were the hardest workers in the field, in the gardens, horticulture, yet they were the poorest in the community. So growing up in such a circumstance led me to think, what is the missing link here? Having been able then to go to university, I went to one of the most prominent universities in Zimbabwe called National University of Science and Technology. I did BCom Finance. Now I could see the link, the missing link. If my mothers were financially literate, if they were digitally literate, and now mixing up with the hard working that they would do, they were going to be people that could be recognized in the society. And the statistics are real. 70% of our African women are financially excluded and don't have, access to the formal financial streams because they do not have one important thing that's regarded in a financial setup for them to be able to get funding, small loans, that is collateral. From the African perspective, the collateral is in the name of our fathers, our husbands, our brothers. Wealth is transferred from one man to the other. So who can stand that? So this is what brought me to the dream, Tom. And I said, what can I do as a girl child in the society, as a woman, to help other women? This is how I founded MoneyMart Finance, where I said this is a market for money. Women are going to get anything that talks money. That's financial literacy, that's digital literacy, that's investments. And I'm not going to need any collateral. Why should I talk about collateral in a world where my asset is my tech footprint, is my transactions of the day? So this is where I got the concept to say we don't need collateral. We need to be able to come together as women, validate each other, know each other so well, and then there we go. We can trust each other and even trust each other with our own monies. And that's how MoneyMart was birthed.
That's a fantastic story, and we're going to go into a lot more detail of how it works, but love to hear your version and how you got into it.
Yes, thank you, Thomas. So my name is Tokunboh Ishmael, co-founder and managing partner at Alitheia Capital. Alitheia Capital is an impact investment firm based out of Lagos, Nigeria, and West Africa. And it started 18 years ago when I first moved to Nigeria to work. And I'll come on to that in a moment. But going back to my origins, I was born in Germany, actually moved to the UK when I was about 2. My mother was a computer programmer, so I actually grew up with computers in my space, and went to school in the UK, moved to Nigeria with my parents at some point, studied computer science, one of the earlier students of computer science in Nigeria. And then when I could find my way back to the UK, came back to the UK, entered the world of technology, which was very male-dominated. And it was during one of my presentations to the board of a company I was working with, which at the time was, how can you get computers on everyone's desks? That sounds very alien today, because you're wondering, were they not always there? But there was a time when people pushed back on this, and I couldn't get the board to agree. And so the person that stood in my way was the chief financial officer of the company. So I said, I need to learn finance. So that was my first time where I thought to myself, financial education is key. He has used financial language to stop something that is very important about digitally enabling the whole company. This was a large oil company, by the way, and I'm aging myself by saying this was in the late 80s, early 90s. And so I went to business school. I did eventually get all the computers on the desk, but I still went off to business school, London Business School. Are we competitors? We're friends. And I went to learn about finance and strategy, found myself on Wall Street. After that, found myself in Silicon Valley. After that, combining my finance and technology, and then came back to the UK to actually run one of the first university challenge funds that was set up in the UK way back with Tony Blair, actually. So I was bringing together all of that information and those skills, and then went to Nigeria for a trip and saw how small businesses were struggling to raise financing. And I said, actually, I don't want to give finance to companies in the UK. I want to move to Nigeria and work there. So I moved to Nigeria with a private equity fund. And what I saw was that there was a certain focus that excluded a large part of the population that I cared about, the small and growing businesses, the women, and the impact. And what I also saw was that I was making a lot of money and making other wealthy people wealthier. And so I was like, actually, there must be a way to combine my high finance with the low finance and inclusion. And that's how Alitheia Capital was born. And so we started on the financial inclusion journey, investing in microfinance banks, helping them to scale. But what I saw when I was driving on the financial inclusion side was, well, first of all, the women were excluded, but also that we were focusing on financial access and banking the unbanked and underbanked. But we were missing out on the financial education piece, because if you want people to access financial services, because it's two ways, you can provide access, but they need to want it. They need to be educated so that they have the motivation. And so out of that, I then started a financial literacy platform called Yellow Cowries, which teaches financial literacy through gamification. And we can talk some more about that later on. And then a final piece of the jigsaw, which I'd like to talk about, is from there, talking about the exclusion of women, we then at Alitheia Capital moved on, we were motivated to move on to thinking about access to finance for women, not just at the micro level, but also for them to scale and build their businesses. And so we pioneered in the area of gender lens and gender smart investing, and 10 years ago started a $100 million fund to invest in female entrepreneurs, not just at the micro end, but showing and changing the narrative around funding female entrepreneurs. And again, the statistics show over 50% of businesses in Africa are run by women, yet they get less than 2% of the funding. And so our fund came along to bridge that gap and bridge that female founders equity gap. So I'll pause there for now, because I know you have lots of questions to go deeper.
It's absolutely about it too. If you giving us this experience, I mean, it seems that the problem is very evident, or the exclusion, the question of illiteracy. In your experience, when you went out there, what was the appetite for literacy? Because often it's not something that people immediately understand that they need it. And how did you sort of find out what these potential female entrepreneurs really want and need, and what they care about?
For that, the appetite was very low. What these women just wanted is someone to give them money and don't care about what you've done to me. We are living in economies where grant funds and maybe impact investors are coming, not really to make it sustainable, but for them to just live by the day and maybe look forward to another helping hand tomorrow. So there was not really appetite, but for us, we realized that there's that gap, and we need to make sure that there's appetite. And we needed to teach them how it is good for them, if it's going to become sustainable for them. So for your own information, Tom, we had to come from home economics. You are in a household, you are a woman, you are a mother. How are you handling your finances in that home? What type of foodstuffs, or how much of your budget goes to foodstuffs before you start thinking of other important things like school fees, those essentials. And we realize that they are just living, and sometimes there's so much wastage in the home. And we could make them see that, look, if it's a family of 4, how much foodstuffs do you want? And how much were you consuming in that particular setup? And did you know that they could save up to 30% of what they've been wasting in that particular home? And all of a sudden, they could realize if they save that 30% each month, that can be a whole term school fees for a primary kid. And this rude awakening comes to them and say, so why are my kids being sent away from school, yet I can afford this? You see. So we had to stir that that enthusiasm to make them see the importance. So now when they've seen the importance of basic saving from home, now we could talk. Now you've got a small business. What does it mean? What is the difference between your revenue and your profit? Because to them, the moment they make revenue, today they've sold as much as, $50 US. In their mind, now I have $50 US in my pocket. But that knowledge to know that part of the $50 US, there's that $40 US capital that needs to be invested back into the business. There was not that. So the moment they get that, there's that impulse buying which comes with women. They start thinking, so what's the next fashion that I can just go buy so that I can be included with others in the streets and the like. And we had to remove that hunger and make them see and know, how do you operate a sustainable business, even from a small business? For us, we have testimonies of women who started doing small businesses by the roadside in our peri-urban areas. We have gone to have tables on the market. Now they are telling us they are in different markets and they are now able to employ other youths. And they can account. They have a proper system of accounting what's really happening in their small businesses. And in the mix of things, because we are bringing them together, now the ecosystem is growing. Ethel is farming tomatoes. She's connected to Ethel, who is selling to the market. And she is connected to that woman who has got canteens, who needs the tomatoes. So now funding is circulating amongst our own selves. And yes, it becomes sustainable. That's how so important financial literacy it is, especially to the type of statistics of women that we are talking about. And they see, by the way, anyway, we can actually live within our means and start growing as we go.
Yeah. Very curious to your perspective. And probably you saw it from a slightly different perspective.
That's what I was going to say.
Different part of Africa, and you probably work with different types of businesses too. Love to hear your view.
Yes, so some of the businesses that we work with, like I said earlier, in terms of changing the narrative, are larger businesses. So we're looking for businesses that have absorptive capacity of 2 to 5 million, and in some cases $8 million. So these are larger businesses. So you're first of all addressing the problem of actually even getting funding, because they're being faced with the unconscious bias that comes from what we say performance bias, where funders are looking at a typical female founder and assessing her based on what she says she's going to do, assessing her based on what she's done in the past, not in terms of the opportunity, whereas male founders are being assessed based on how they're talking up what they're going to do in the future. And oftentimes we would see a female founder who is, has grown and scaled beyond at least 3 cities in Nigeria, and she's having to justify why she should be funded. And we're seeing male founders who haven't actually even gone out of one city, who are being who are not needing to justify beyond saying, I am going to do this in the future. So really, first of all, bridging that gap. And when we bring funding, a form of financial literacy for us is helping the women think about how they can scale their business. What do they need to plan? How do they manage cash flow? Because I'm sure you find when you're looking at case studies of businesses, that cash flow shortage kills many businesses. So how do you manage cash flows, and how do you then go out to fund for your business? Because again, it's how are you able to sell your idea? How are you able to sell the vision? So we spend a lot of time beyond the money we give, coaching and mentoring our founders to think about these areas and open up access to markets beyond their primary market, help them think about access to talent, how they're able to recruit, and access to networks that can make that come through. So we deal with both the financial side and the non-financial side. which is actually also interesting because that helped to form the financial literacy education that we do through Yellow Calories, where for the businesses, we talk about planning your budget, managing your finances, and funding your businesses. And yes, there is that hurdle of financial literacy, but the angle that we came to it through Yellow Calories was to say, who wants to read dense manuals about learning about finance? So we created a game. And so the cards game can be used to teach on these principles of planning, managing your business, and funding. And we also have that on the individual side for women to say, how do you plan? How do you plan your budget? How do you save? And how do you invest? Because wealth creation doesn't just come from itty-bitty savings. It comes from being intentional about investment. So we see it from that large scale, and that informs how we conduct financial education.
And it's really quite interesting. You're sort of starting to get us towards, what are the solutions that really matter. And actually, if I may, I'm just going to take a sort of a step back, but I think one of the defining moments for the whole microcredit movement was the year that Muhammad Yunus got the Nobel Peace Prize, and that was sort of a big aha moment. But he was in Bangladesh, and he was doing a very particular type of peer group lending. And you had to sort of invent the model for your context, which I'm sure will look very different than what Muhammad did in Bangladesh. So how did you find a solution that actually resonated with the woman that you were working with?
For us, I looked at the Zimbabwean context and environment, and can we really adopt the normal old banking system of waiting for just a deduction at the end of the month? And I'm looking at these women, especially, the statistics in Zimbabwe are telling us that 60% of our GDP is being contributed by the MSME sector. And amongst the MSME sector, 60% are women. So where are they going to really have a salary that hits that bank account, which they don't have anyway, and someone will be able to deduct? It was not going to work. So I said, let me, I would take time to go into the market. I would be with them every day and see how they do their things. So I said, right, this concept needs to be reinvented. I said, you know what, guys? There's a simple thing. At which particular time of the day, especially when you are in the market, do you make most of your sales? And they'll tell you, Ethel, I make most of my sales between 6 a.m. and 11:30 a.m. I said, wonderful. So take a small loan to boost your business. I come between 6 a.m. and 11:30 a.m. and collect that small repayment from you. And I'll do that on a daily basis. Yes. And it worked for them because they were no longer not struggling to pay. They've made the sales. The first priority was to pay their debt. And they continued to be, honest. The issue of character, when we talk about the 5 C's, of credit assessment. And they started enjoying it. Never then became a burden. When I went back to them and said, guys, let me show you some statistics that you've done. You have been taking weekly loans. They'll take maybe $100 for about 4 weeks. And I said, let me come back to you now. So you see, over a period of 3 months, it means that you have injected in your business something to the tune of, say, $300, others even to the tune of $1,000. But it not come as a lump sum all at once, which made them be afraid of debt. And how will I be able to pay $1,000? Not for me. So I said, look at this. This is what you did. But someone just came in to make sure that breaks down them into pieces that you can understand, that you can work with, that you have not been set up for default. And this is it. When the financial institution is coming to your account at the end of the month after your payday, they are just setting up you for success because the money is there. It has hit the account. And we are just doing the reverse, coming at exactly between 6 a.m. and 11:30 a.m. because this is where you're holding most of your cash flows, and it really worked. So for me, I said, okay, this is what we just need in our different areas to understand our lifestyles, to understand how our people live. Because I'm coming from a country where we live from hand to mouth. And how do we turn around such a situation to become sustainable, to start teaching them to say, okay, now that we have removed what's necessary, you've put aside your capital to do it again tomorrow, you've paid your debt, you have paid everything, now this is the profit. We just leave you with the profit in your hand and say, okay, so what do you do with this profit? Why don't you take 10% of that and save so that you have more capital for tomorrow? So you see how we break it down. You know, I could relate with what I was talking about, even for myself. It has been so difficult as a woman to raise capital. I had to, to voice out, to stand on those platforms, to make noise. I could feel I'm shouting 3 times as much as my male counterparts for me to be recognized and seen. And yet, I had the statistics, I had the data to show that I'm doing something which is commendable and which is sustainable to the women that I'm working with, and I'm looking at that, someone is just paying attention to my male counterpart because maybe they've got a hoarse voice, unlike me. So, but you see, this is the context that we are bringing back the solutions to our own countries and making sure that they are also financially and digitally included. Like right now, data is expensive in Zimbabwe. So should I continue giving them an application to use? I can't. What should I do next? The next thing that we are doing is to give them a 0-rated app. They go to that CEOMoneyMart brick and mortar branch, there's Wi-Fi there, they download the app and they go. They no longer need any data. It becomes sustainable. Yes, some of them, they do not have smartphones. So what do we then do? We give them a USSD code. We know someone has knocked our doors and we go there running to meet them face to face now because we've known where they are and how they've knocked on our door. So these are the solutions that we are saying. We might not moving as fast as the world is doing in tech issues, but surely there are solutions that can fit for us, for our markets, which can make us live independently and sustainably as a people and as a nation.
I just want to, talking about solutions, I want to bring it back to the theme of International Women's Day around accelerating action, which is what Alitheia does. Because when we provide that funding, we're helping the founders in general, women in particular, think beyond, we're helping them to raise their aspirations. Because oftentimes what we see is that because our female founders have received too many no's, they begin to reduce their aspirations. So to accelerate action, we're saying, okay, let's put our money where our mouth is, but also let's help you to accelerate your growth. So we have businesses, manufacturing capacities where we've taken them from producing agro-processed products for sale in Nigeria, in West Africa, to now export. So really helping them to scale their business, helping them to bring in foreign currency, which helps them to show that they can produce at scale and therefore accelerate on their acquisition of clients and customers. Also, in terms of accelerating action and talking about digitally enabling, we've invested in tech companies who have focused on maybe digital ID for the general population. And we say, no, bring that back, focus on how can we have your customer base be greater than 50%. Because a woman without a digital ID cannot access finance, whether at the micro entrepreneur level or the large manufacturing concern. So all of that to say what we do to accelerate action is bring gender consciousness into businesses, right from the boardroom all the way down to the factory floor. So, and we talk about increasing female representation in the board and across management, because that brings dividends of diversity. you have better decision making, better governance, and you have greater innovation. And we do that through the value chain of the business with the employees. We've been in manufacturing plants where there are no toilets for women. And so the women are not being as productive. So even just bringing in toilets for women, increasing the ratio of women that are employed within those businesses, and then thinking about the kinds of products and services, right-sized, right-designed, right-priced for women. So for example, with some of our financial companies, the people that go out to sell those products, it's not just men. Because in some cases in the north, for example, the women can't be seen to be speaking to the men for religious reasons. So you also think about who are the sales agents that are going out, who are the ones that can relate to what the woman is thinking about. Health services. The female biology is more complex. So how do you accelerate action to make sure that the health clinics are right size, right product to serve on those essential services? So we look at the whole gamut of the scale from the boardroom all the way to the factory floor to think about how can you accelerate action, how can you empower women, how can you bridge that gap. There have been interesting stories because sometimes people say to me, oh, you only invest in women. I'm like, actually, I like to, when I invest in a male-founded company, to bring our whole toolkit, to bring that gender consciousness and enable them to scale their businesses, not because they've done something which is a nice to have, but because they also see that in addition to the moral obligation, there's an economic dividend that comes from that. And the statistics show that companies that are diverse outperform companies that are not by up to 20%. So really, for us, it's about how do we drive for that gender consciousness, for those dividends of diversity to accelerate action to scale.
I think both of you are fantastic role models as agents of change, but both of you have, in some sense, a company, an investment fund, in which there's sort of the investment component, and then there's sort of this leadership and literacy and training component. How do you combine them to make it a viable business for you, that you can actually, do this for the next 30 years? And what's the challenges, in some sense, of running this as a financial fund?
Well, I can take it from the financial fund side, because as an impact investor, when we first came out as vocally saying, we want to drive for financial returns and impact, it was deemed impossible. Like, oh no, impact is about charity. So we've helped to change the narrative because we're building businesses that are growing and scaling and in a sustainable manner. So combining it for us, I can give a case study where with one company in the energy space, when we helped them to right size and right price their products to make them more affordable and accessible, suddenly they were not just providing their energy services to the 1% of the population. Suddenly they had a broader market that they can access, and that amplified their revenues and returns. So when we look at the impact side, we are not sacrificing the financial side. We are thinking about building sustainable businesses. And talking about sustainability, I can bring the work that we do around climate action, which also goes beyond just the phrase of climate action to say, actually, when you have energy access and efficiency, you can drop the operating costs of a company, and that cash goes straight to the bottom line. So by greening companies as well, we're helping them to grow sustainably, not just from an impact perspective, from a financial perspective too. So for us, we're not trying to sacrifice, and we're being very intentional, because that's what's key for us to be able to do them both.
I'm going to come to the audience in a moment, but we'll first have you sort of comment on the running of financial fund, essentially, and then we'll definitely go to the audience.
Oh, thank you for that. And for us, look, I'm talking about the bottom of the pyramid here, where I'm looking at a woman who is even living in an off-grid area where there's not even one pole of electricity that's going to assumed to come to that particular place. And we are saying, you know, everything revolves about your financial planning, and everything revolves about how much you have. For us to live comfortable lives, it's not really about how much do I earn. It's about how much can I plan my money to live accordingly to the space that, you know, I can live without even stressing myself, without even talking about, you know, the common diseases that we are hearing around because someone is trying to meet a certain standard. So this is where we are coming in to say when we fund those businesses, we also look at how do we support them along the way. So I find that as MoneyMart Finance, we came to that extent of saying, okay, there's issue of this SDG number 7, renewable energy. How do we go about it? For them to have a solar plant in the village, it's very expensive for them. It cannot be sustained. It cannot be affordable to them. How do we even break it down to their level so that there's affordability? And there we go. We had a pay-as-you-go, which we contributed immensely to our manufacturer to say, we need a pay-as-you-go so that they can pay $1 a day as they go, you know. And once they have enjoyed the reality of light, they can never want to be in the dark. Mm-hmm. So their planning is now going to be so deliberate. And at the end of the day, along the 24, 36 months, they would have paid in full all this equipment and they'll start enjoying it and the benefits that come with it. So you really have to be deliberate when we are talking about this and how they can scale from one point to another. And for us, we then see the impact because now we hear the stories of women who are now affording to send their kids as much as to university level. But how did those kids manage to pass for them to go to university? It's because we are not excluding our diversity as African women. We understand I'm a girl child in the home. When I come back from school, I need to do the dishes. Of course, I need to do the laundry during weekends. Maybe I also need to help with the farm. But there was that particular time from 6 p.m. to 9 p.m. in the evening where I could not be productive because it was all dark. Mm-hmm. Now there's renewable energy. I can really take care of that time and improve in my studies, be deliberate about my studies, and now I can have higher grades. So you see the ripple effect that it comes with. And remember, I'm a mother. The moment my daughter, my son comes home with those flying colors, I'm motivated to work more for them to go to another level, to another grade. And it is what it is, and the communities come to life again.
It's very inspirational. I mean, I have lots more questions, but I'd love to hear from the audience. So we'll take the woman at the back, raised her hand high.
Thank you. Hi, I'm Manjiri. My question is to both of you. Apart from financial literacy, digital literacy, which you're both working on, you mentioned things which dealt with much more stakeholder management than it would normally take. For example, you spoke about a polygamous society, everything, all the patriarchy that comes with it, to people not being allowed to sell because of the gender issues. So what was the opposition you faced while dealing with these, and how did you overcome them?
Well, I mean, I can talk about a particular situation where we have a manufacturing concern in a community in Nigeria, which is outside of the main commercial center of Lagos. And already when the community sees the upliftment in their income and their lives and their livelihoods, it's very hard to argue against that. And so we're seeing that in communities where we're funding agro-processing manufacturing plants, that the farmers are connected to that plant, and they are seeing that uplift. And it was interesting when we went to one which is in northern Nigeria, and we had the community farmers come and speak about how it had changed their lives. The men spoke about how their wives were more engaged and they were able to also contribute. And the women spoke highly about the fact that they felt empowered and they finally had bank accounts because now they had enough money to put into the banks. And so they also talked about how this was enabling them to pay for their children's school fees, and not just for primary school fees, but beyond primary. So when you see the empowerment, it's difficult for communities to speak back against that, because who doesn't want to have electricity? Wherever we have a plant, we're bringing power, we're bringing water. Who doesn't want those good benefits for life? And what you're also seeing is that the women are seeing that by being engaged and having access to off-grid electricity, it's reducing their drudgery. So they don't have to just be at the home, they can be out in the community, selling products, helping to gather the products for access to the market. So their skilling up is going beyond the home and the drudgery of, in some cases, fetching firewood, to some higher order tasks. So you don't see much of that backlash, and you'd be surprised that the culture also begins to adapt to that betterment for the family and community.
For us, the opposition that we faced was that if you were going to give this woman that loan to empower them and do their businesses, they to get consent from the husband or the father. And, they just could not make a decision when you visit the market and give them this information to say, look, you can do more. When you were traveling 3 times up and down, trying to reorder 3 times a day, you can do it all at once in the morning. You go and sell, and you save on the transport cost of going back and forth, and it makes sense to you. So how we had to overcome that was now to put them in groups so that they empower each other, and to their husbands, it's more like it's a women group. We are doing this as women. And, they enjoy it so much because now it's all about us women, and this is where we also talk about our home issues and try to help each other. But I think the enlightenment really came when some of these husbands, fathers, and brothers started realizing, oh my goodness, there's so much that this woman is bringing back home. And instead of me coming home as a man back, wanting to come back with something home and say, my family, here is what I got during the day, they were no longer having that troublesome wives who shout at them, what did you bring today? How am I going to feed the family? Because she's getting home and there's food on the table for this family anyway. So it's now complementing to each other. So I think this is where we got the win. But in other communities that we went, especially the community leaders, they came a war cry now to say, when you do these lessons, please also call the men. They also now need the same lessons. And this is how we are now moving. We are realizing that as communities in our nation context, we concentrated so much on the girl child. The girl child is now empowered to the extent that the boy child maybe is now afraid of this, same generation girl child because she has been empowered. And we've already created some other problem because we really need the boy child to move together with us. So we are now starting to rethink again to say, how do we include them equally to make sure we give attention also to the boy child and not only to the girl child?
That's really interesting. You've got another question right there and then right there.
Firstly, can I just say this was so inspiring, especially Ethel, when you mentioned about the idea of women creating businesses and hiring people just for survival instincts. Imagine what these women could do if they were deliberately taking the action to be more ambitious, what these women could bring back home. So first, it's huge round of applause because that was so inspiring.
Thank you.
I have personally so many questions, but I'll stick to one for either of you. So firstly, Ethel, I want to talk a bit more about the default rates amongst MSMEs. So I'll give you some context. I'm from India, and in India, the MSMEs that are led by women, the way that the Indian government has solved the problem of default rates was by allowing these women to pool their money together and then giving them concessions in terms of you don't have to get collateral, and government-led banks were giving them the space to, oh, you don't need collateral, we'll give you loans if you pool together your money and come as like a registered SME. But then, at least from my brief research now on Zimbabwe's policies for MSMEs, they are good policies, but they've not been implemented very well. So as a financing solution that's in like a private financing solution in the space, how do you ensure that women-led MSMEs are able to give back the money? You mentioned about like dividing the debt that they're given into different parts, but what other ways do you ensure that the default rates are low and that you actually get the funds that they require?
Well, that's an excellent question, actually. We were discussing about it earlier, and she was asking me, how do you go about this? And I said, you know what? There are always two sides to the story, you know. When you understand your client, here is your client. This is the way that she lives. And when you do alternative credit assessment, what's your status in the community? How does she want to feel amongst others? And is she open up to, you know, her life to be an open life and the like? You know, because they want to be part of community. Remember, we are women here. And we want to be together. We don't have that ego of making it alone. Yeah, so that's what makes them. So we understood that as our client. And more to it, then we realized some of the things that make them default is sickness in the home, death in the home. For us, someone can go for a funeral for 3 days, if not 7 days at a funeral. And this business literally stops. So what did we do then? We needed to embed some sort of insurance without really telling them you're participating in an insurance program. But we had to do it cleverly. You take a loan. You taking that loan is going for 6 months, is going for 9 months. Already we have embedded for all the repayments that you are making, we are just including $1 per month. When you have a funeral in the home, please come to MoneyMart Finance. We cash out as much as $500 and you can go take care of the funeral. Now you don't have to disturb the cash flows of the business, and then there's no default in that. And we are trying also to do the same even with their health living as women. We know it's so expensive for them in our context for them to have medical aids. They cannot really pay that because in our case in Zimbabwe, the premium of the subscription for medical aid could be as equivalent to 2 rooms rentals. And they cannot afford to not to pay rentals and do the medical. So what do we do then? We then say, no, guys, let's give you a very low cost. Survive on the $1 a day, like what you are used to as a woman, and we give you that access to go see a proper physician when you really get sick. And remember, these are women. When there's a headache, they don't start just by running to the doctor. They find all other African medicines so that they keep going. It's only when it has really become serious. And we are saying, why should we not insure them? Yet they visit the doctor once in 6 months. And why should we take the money on every other month, such money? Yet we know this person will only visit a doctor when she cannot even walk. So let's do it. Let's embed.
Before I cut so interesting, before I move on to my question to Tokunboh, just a quick follow-up. So then, where do you source...
Keep it short. There's one.
Oh, sorry.
There's some
Okay.
other people who also want to ask questions.
Let's move on to my question then. Oh, yeah, sorry. Okay, so one quick question for Tokunboh. You mentioned, I would like to know a bit more about your investment thesis, because going through your portfolio, and most of them tend to be like fintech or like upstream in the supply chain investments. So like, when do you choose to exit? And what's your reasoning when you screen these companies, and how do you go into it?
So we have a couple, you rightly spotted that we have a couple of funds with different themes. We have our access to financial services theme, which is where you'll see a number of the fintechs. We have an access to essential services, which is also about embedded finance within, for example, logistics. So all of these are about how you improve lives and livelihoods. So access to financial services, with logistics, for example, is access to work, decent work, that also comes with embedded insurance and other embedded in financial services, planning, education. So we embed a number of these essential services within those products. So for those funds, it's about how are we helping to create jobs? How are we helping to bank the underbanked? We also then have the Gender Smart Fund, which I mentioned earlier, and we have a whole toolkit around, okay, first of all, we want female founders. We want at least 50% of our portfolio to be female founders. We've actually gone to 80% just by being intentional. We want every company that we invest in, we look at we give them a gender smart rating from negative through neutral to strategic. And we say with every business, we want to move them to gender strategic. And gender strategic is where you begin to really leverage on the dividends of diversity and being able to scale and achieve superior performance. When you have the gender neutral, that's typically when we're investing in a male founder who has, that you'll be surprised there's some companies that have no woman at the board, no woman in their management, and 80% of their employees are men. And some of that is because you don't have a toilet on your manufacturing floor, or you just haven't been intentional. And then maybe their products are not rightly suited to be able to sell to women, like I was talking about the supply, the value chain of selling certain types of financial products. So we screen these companies and then we develop an action plan. So with some companies in our access to essential services portfolio, they're not thinking about the bottom of the pyramid. And we're coming along and saying, you know, if you just tweak your product this way, it could be suited to not just the wealthy, but to the whole spectrum of the economic pyramid. And then you have some, like I'm saying with the gender, on the gender fund, where there is no gender consciousness, and where we create a gender action plan to get them from that negative to strategic. So we have a couple of portfolios, and the criteria differs, but in all our portfolios, we have an action plan. And the moment we go in, we're beginning to think, and we call it part of our value creation, both from how do you grow the revenues, how do you reduce costs, which is where some of our greening finance comes into play, to how do you bring in all these gender actions for superior performance. And who should we start to think about selling these companies to? And so the timing of exits can be very different for different companies. And if you spend any time thinking about how you exit from private businesses in Africa, you'll know that the exit market is quite tough. So we have to use some ingenuity around how we have some share buybacks, or we have some returnable instruments that enable us to exit over time. And obviously we're selling to larger companies and funds.
Very good. So,
thank you very much. So I wanted to ask that, relating to your strategy, the impact investing strategy, very similar to our first question, what are the risks that are very pertinent to what you do, and if there's any way that you've been able to resolve some of the risk that is very unique to your strategy so far?
Yeah, so first of all, I want to say, I'm glad you prompted me to be able to say this, that when we look at our impact strategy, we like our founders to begin to think about impact, not just impact focus, ESG and impact, not just as a risk set, but an opportunity set. So not just challenges, but opportunities. And how can you use the fact, for example, with ESG, with on the S side, the dividends of diversity to get superior performance? How can you use on the environmental side the fact that you're greening your energy source to reduce your energy cost, which is the largest cost bucket for SMEs? How do you use that to your advantage? So, because oftentimes when people talk about impact, they say, oh, there's all this additional baggage and it's all about risks. Actually, turn it round to how can you use it as opportunities? And by the way, subtext, use that in life. When you see risks and challenges, think about how you turn that around to opportunities. And again, subtext, when I was starting out with the company and we were raising funds, and I saw the risks around fundraising for female founders, and even for myself as a female founder, I had to turn that around and think about who are the people that care about what I want to do? How can I showcase the advantages of impact so that people don't think it's about charity? So it really is about framing. You have to frame to use the risk, yes, to mitigate against risk, which includes general risk for SMEs around running out of financing, that comes, and therefore working capital. That comes back to what I was saying earlier about teaching how to plan, manage, and fund your business. And similar, thinking about the environmental risks, thinking about currency risks, which is a huge part of risks in our portfolio. And we have suffered significantly from that. And the way that we turn around to mitigate on that is driving each of our portfolio businesses to seek foreign income. So the exports, the import substitution, the diversification, that's how we drive for some of those risks. But really, we try and turn those around to opportunities. Because if you weren't mitigating for that foreign currency risk, there's a tendency to say, actually, my market is okay. Just like I said earlier, where we often have to help our founders raise their aspirations. And in raising the aspiration to seek export income, we're helping to mitigate on the foreign currency risk.
You want to just add something before we close the event?
I like it when we talk about risk, but I always say the greatest risk that we are sitting on, especially in our African context, is not to do anything about it. Because now I'm looking at the risk of letting those businesses just die as small as they are. And then it means that we are going to wake up one day looking for employment somewhere. And are we going to leave Africa where the life is like when we look at the world at large? So this is the risk that we are more afraid of rather than the risk of us trying. Yes, losing along the way, but waking up, recouping the lessons, and then go forward again as an institution. So this is how we look at, because when we see that statistics that 80% of the employment right now is sitting in MSME sector, you can't ignore such statistics. And I'm looking at myself. My eldest son is just about 11 years old. What is he going to do? Is he going to look outside the borders for him then to have to survive? But no, I'm passionate about my country, my nation, my continent, and he has to do something about it. So I need to raise that small business, which in the 10 years it turns 21, it will be a business that he can also walk in and solve the problems of their own generations in their context of Africa. Thank you.
Given that this is an International Women's Day event, can I just end with saying that to accelerate action, starting from yourselves, don't get lost in the analysis paralysis of the status quo. If they don't give you a seat at the table, create your own table.
Thank you very much. I think, we can all say this is an absolutely fascinating discussion, and it could have gone on for hours and hours. But sadly, I know that people who are online need to log off. And thank you very much, everybody, for coming. Hopefully, Ethel and Tokunboh will be around for a little bit longer. So please enjoy that magnificent spread we have at the back of the room as well. But thank you, Thomas, as well, very much, for being here today. So thanks again.